Hi there, welcome to Market Call. David Burrows is on the show today. He's President and Chief Investment Strategist at Barometer Capital Management. Great to see you.
Great to be here.
He will take your calls, emails, tweets and video questions on North American large caps. There's that number, 1-855-326-6266. Send an email to marketcall@bnn.ca or pop your question on the Twittertron. Remember to include @MarketCall. David, great to see you. Let's have a look at a 10-year chart for the S&P 500, for example. A thing of beauty.
It really is.
Trading at record levels. Is it harder to find bargains in this market?
If you're looking at PEs versus estimates, there's people who point out the fact that the PEs have been moving higher, price earnings multiples, and so prices are higher. A couple things on that. The first thing is last quarter, 55% of companies beat the estimates. So the estimates were too low. And that's been rising. And estimates are rising. So I think that the price earnings multiple that people are looking at is probably making stocks look more expensive than they are. The second thing is we're at extremely low interest rates and PEs can be higher. So, I think I've stated on this show, I think we are in a secular bull market for equities. It didn't really start until 2013 when we took out the highs from the last bull market in 2000. That was the first year of multiple expansion. And multiples have been expanding since then. And, I think we're going to see corrections. But I would expect that equities over the 10 years between sort of 2013 and 23 are probably in the teens from a return standpoint.
So you think we've got another 6 years or so?
Yeah, no, I'm going to guess that I've said since February of 16, you're likely to see 3-4% corrections because people are underinvested in equities, and every time it pulls back, there's people waiting to have their opportunity. I think that's likely to continue for another year. You could get more than that, but I really don't expect higher volatility. The volatility we've been seeing, everyone says is so low, is virtually identical to the early 90s. It's virtually identical to the early 50s. Both were in secular bull market. This is what happens. But as you went through the 80s, you had an 87 crash 3 years after the first correction. And you had a 20% correction in the 1950s after the first sort of 3-year rally off the first correction. So that, we will see a good-sized correction out there somewhere, but none of my work points to any of the things that would be happening if it were coming up soon.
Tomorrow is actually the 30th anniversary of the great 1987 crash. The Dow went down 23%.
I remember it well. It was a good training day. But I talk about some of the things that I look for as signs. We track the percentage of securities in long-term uptrends, and as long as the percentage of stocks performing well is expanding, there's no bear market or major correction ever took place while that was taking place, and that is what's happening. Correlations stock to stock, or the degree they're behaving the same, yesterday hit a 15-year low. Correlations start to go up when you're headed into a problem. There's no sign of that.
There's a universal euphoria kind of thing when correlations become very close?
Well, it's that there's a systemic issue that's starting to impact the whole market. When there's low correlations, it means certain sectors are benefiting from the current environment, certain sectors are not. Certain stocks are doing well, certain stocks, the market's acting like a market. There's no big overriding issue. So there's a lot of things you would watch for to say that there is vulnerability in the market. And I would say for people who are watching at home, the most important thing that you can look for in the way a market is behaving is how it reacts to news. Now, I think everybody will agree with me that as we've seen lots of big news items over the last year, market doesn't care. It tells you that the fundamental underpinnings are so strong that they can absorb some of these shocks.
We're going to be back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management. The topic today, North American large caps. Give David a call, 1-855-326-6266.